Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. This video is another deep explanation video. And in this video, I'm gonna talk about gaps. Call it gaps, windows, those things which you, since new will appear on the chart on iqoption, and because those things are really common now, I have to explain you and tell you the types of gaps. I'm going to show you now some gaps. If I can see one, I will do this here. This is a gap. Yes, you see, this is a gap, and that is a continuation gap. Yes, this is a continuation gap. You see those areas here. This is a continuation gap. Let me see if I can show you something else. This is an exhaustion gap. Yes, and we have here also some other kind of gaps. I will explain them all, and this can be traded as I will explain this further after I have explained where this kind of gaps will appear. So here we have another gap here. This is a common gap. Yes, and I tell you how you can recognize them. Yes, so let me see if I can show you now those gaps much more. Okay, so there was another one. So okay, let me see if I can explain you this. So first of all, get this ebook. You find the ebook in the description, the link in the description. This ebook is a PDF file. It contains the most important candlestick pattern, chart pattern, binary option, turbo trading concept, market condition, trend identification, rejection, candlestick math, and last but not least, the mindset series, which is worth a watch. Get this ebook. I'm doing the last few candlestick pattern, chart patterns, and so on before I can publish the second edition of this ebook. And now I'm gonna explain you how you can recognize the different kinds of gaps. This video will be about how to trade the breakaway, exhaustion, continuation, and how to and the common gaps. Yes, but the common gaps are not so easy to trade. So let me see if I can show you now. I need some kind of charts. So let me see if I can. I will do something. I need something what looks like a normal chart to copy. So I would say I get something like this here, for example. Let me see. Okay, I have nothing what could be used for this, so I have to do this on my own. So okay, I will create some chart now. I will do some here. I will do some copying of this consolidation area, for example. Here, this is good. This can be used here. One. Okay, wait. I will copy all, and then I will use them. So we get it a little bit faster, yes, so I don't need to do everything from the scratch. So let me see here. Okay, here we copy this here. Okay, this was the evening star. Let me see if I find this where. Oh, that are already a lot of pages now. Yes. So okay, we have here the breakaway, exhaustion, continuation, and so on. So let me position them all in the right position. So I will remove this one. I will remove this one. I'm gonna remove those one here. Yes, and then I will do something what looks like a market. Yes. So we need this one here. Yes. This is a consolidation area. Yes. So okay, we will get this one, and I will do this for an uptrend. So let me remove this only to show you how it works. So okay, so we have this uptrend, and after this uptrend we get a reversal. So I will get everything what we need. So okay, so we have all kind of markets. Yes, an uptrend and downtrend, reversal, consolidation area, yes, and also let me do this here. In the last video I have explained what kind of pattern is this here. Yes, this pattern here was a dark cloud cover. Yes, I hope you remember this. If you have seen the video about the dark cloud cover, this would be a dark cloud cover, and this would be the initiation of a reversal. So let me see. So we have here some kinds of support and resistance area. So let me draw this a little bit better. So, so we have here the support and resistance area. Copy, paste. So this is this here. So and then we can explain. I can explain you how the gaps, where they occur, and what they are telling us about the market. So okay, this is my trend here. I will put this all together a little bit more in this direction. Yes. So okay. And that was not good. So okay, I have to do this in some other way. So okay, so I have to do this some other way, because else it would be I'm only interested in this part here. So I will remove this one. So and then we get this one here. Copy paste. Yes, the consolidation area. So and then we got this, and I will remove, for example, here this one here. This one I will remove this and this. So we have here also some kind of gap. Yes, and then I will do this in this kind to make it understanding to you. Yes, okay, I have to remove also this. So to make it clear where we have gaps and where not. So we have here the trend line, the trend line, the Fibonacci level, the EMAs, everything can be at this place. Yes. So and we have another two. Copy. Yes, we have another two here, because this is in this case it's a consolidation, but it can be also a normal support and resistance area. This is a ranging market. Can be also ranging market. It has to be especially support and consolidation area. Yes, it can happen everything. So and then I can explain you now what is going on. I will look at how I can show you this. So let me see, for example, so okay, so and then we are doing here some kind, let me see if I can do it better to make it clearer. So I will move it a little bit around down, and I will do some kind of markets. It's looking, so we got this here. Yes, so I will move this in this area. Yes, so and so it looks a little bit more like a market. So yes, and this will remove them here, and then we do this here, and another one here. So okay. So this, I think this is enough. Okay, so to explain you what kind of gaps exist, we have here in between. Yes, here in between we have. I will do this with arrows. Yes, so we have here, for example, a gap. Yes, this is a gap. These are common gaps here in between. I will remove also this one. Let me see if I can draw this in little some other kinds here. So copy. Yes. So here I will do this in this case. So yes. So this looks a little bit better. So we have here some gaps. So and this we do this in this manner. I don't know, maybe so. Okay, so and we have here gap, yes, and this gap in this ranging, yes, when it's ranging or consolidation area, not even, but when it's ranging, yes, we have here common, yes, I will do this in this case here that are common, yes, this can be really difficult to trade. I would mostly don't trade them because you don't know in what direction it will go next. So let me copy this tool here. So we have here the common gap, yes, common gaps that are those one which you will appear in between of a ranging market or trending market also, yes. It doesn't matter. These are those one which are in the normal chart, yes, which will appear. Here is a gap, yes. How can I explain you this better? Let me see if I can do a line here. I do 2 lines, copy. Yes, so I will do this here. This is a gap, yes. A gap. This is a gap down, yes. Gap down. This area here is a gap down, yes. And this appears when there are transactions, yes, which are in no orders which will be executed without market activity, yes. And mostly price tries to get them back, yes, to refill. So these are gaps, yes, this gaps here, this is a gap down, this is a gap up. Yes, you see it close or it's opening above this level here. Yes, this is opening below this level, and so it's a gap down and gap up. Yes, and I will do this so that you have it better in mind. So let me draw this here, gap down. Yes, gap down, because it's below, the window is below. So somebody calls also window, yes, but I prefer gaps. So, and then we have here the gap up here. This is a gap up, yes. So and that are common gaps, yes, gap up. So and that are the common gaps in between of a range, yes, of a trend channel, and so on. That are the common gaps. So then, if we are going to break out, yes, if we are going to break out of any trend channel, and I have explained this kind of stuff about the trend channel, then we get the breakaway gap. Yes, this area here, let me show you this. This area here is copy. So this area here, yes, between this one here, yes, here, this. You see it's where also the support and resistance area is, yes, and here this one, this is another gap up, yes. It could be go also below, yes, but this kind of gap is called the breakaway gap, and it's clear why, because we are going to break out, yes. There's a breakout, and then it's gapping, yeah. It's a gap then, yes. So gap, and I will write it here, gap up, yes, and then I will do the arrow here. It's important that you can spot them and you understand what's about this. So this is a breakaway gap, because that is the reason why you have to recognize them, because you understand when you see some kind of those gaps what is happening. Breakaway gap, yes, that is a breakaway gap. Breakaway gap. Yeah, breakaway gaps are those which are coming after a breakout, yes, of a trend channel, of the Bollinger Bands, or every kind of support and resistance area, yes, trend lines, Fibonacci level. They occur. So, and then we got here after another gap, yes, this is a position, yes, the position here, and this is another gap up, because we are here in an uptrend, yes. That can be also happening on a downtrend, yes, and or also in an uptrend there could be some kind of it has not always to be a gap up, yes, but in this example we have gap ups, Yes, if I could do also gap downs. Yes, it doesn't have to be gap up, only gap up. Okay, so let me see this gap here and that kind. Okay, it's also a gap up. So I will do this here. This is another gap here. Yes, I have to get those things here a little bit closer because it's too much space. So I will do this here. Yes, so and then. Okay, so in this manner, and this space here in between is also a gap up. So I will position it now here. So we have it here, another gap up. So, and this is called the continuation. Yes, continuation gap. Let me see. Okay, this has some more names. It's called continuation gap. Wait, let me copy. So it's called continuation gaps or continuation gaps or comma runaway, not breakaway, runaway gaps or measuring gaps. Yes, I don't know why they give to the same thing so many different names. Yes, I prefer to be honest as the continuation. Yes, because you see it's a continuation of this uptrend. Yes, and so it's a continuation gap. Yes, but only for the case that you hear also the other names, runaway and measuring. Yes, you know they mean a continuation gap. So, and this was the second one. Yes, and you know when you see in a good uptrend, yes, or downtrend, and you see a gap, you can predict that it will go up further. It doesn't mean that the next candle will go up further, yes, because mostly gaps try to get refilled. Yes, that means you have to be carefully. But I will tell you how you can trade them after I have explained you those kind of gaps. So let me see. Okay, this was this one here, another gap up. So, and we have then another gap up here above, yes, only for demonstration, yes, for the demonstration. And then here I will put this here, yes. This is another one, and this one is the last one, yes. So this is the last one, and this gap is only for the, obviously they will not occur so often, yes. But if they occur, you know what it has to mean. So let me see. So so that is exhaustion gap. Yes, so that is exhaustion gap. Yeah, exhaustion gaps. So, and now I can tell you what is what's about and how you can trade those gaps. The gaps itself you cannot trade. Yes, I would not recommend to trade the gap itself. Yes, because like I told you, they try to refill. That means if you get such a gap up, this candle tries to go down. Yes, and to refill this, yes, and that is really risky. And you can the only thing what you can do is, and what I can recommend to you is, if you see something like a gap up, use or gap down, use those gaps as support and resistance area. Yes, you can use this area here of this gaps. I will get this in this area, so you understand them, and this is how you have to trade them. These gaps, yes, you have to trade them and use them as support and resistance area, yes, and they are mostly they work really well as support and resistance area, and that's the reason, and that is how you have to trade them. Yes, you have to use them as support and resistance area. Yes, and okay, here I could say it's a fake breakout. So, and this is how you have to trade them. You have to trade them like support and resistance area. If you spot them, you can use these areas between the gaps, yes, the window, as support and resistance area. Yes, here support and resistance area. I have to rename this then, and I will write SNR. Yes, and also this one, and this is then also that are really reliable support and resistance area, mostly. So, but you know, it depends always from the market and everything. You have to be carefully also. Yes, you cannot trade these gaps then also blindly the support and resistance area. So S and R, yes, support and resistance. I will write them support and resistance, so you know it is better. Yes, and this is how you have to trade gaps. Yes, gap itself I would not recommend to trade, because they try mostly to fill, but this is not sure, and so I would not recommend to trade them. But you can trade those areas here, because you know support and the resistance are mostly areas, and when you see some kind of rejection, yes, from those areas, you can use them as support and resistance. So let me see if I can put this also here in. So this also support and resistance area, yes, and then you can use your rejection stuff, yes, and everything else as which like you are used to. So let me get this also here. So I will draw this here also, so it's much more clearer. Yes, also if this one here in between would be also support and resistance. So, and that is how you have to use the gaps. Now that the iqoption platform has changed and they are showing up those gaps too. I got a lot of questions from users and traders who asked me how to draw support and resistance areas. Yes, and this is how you have to draw support and resistance area. You have almost to use those gaps, yes, as support and resistance areas. So easy it is. So I would say this was the stuff about most important gaps, yes, common gaps, yes. Let me see if I can do this a little bit bold. Yeah, breakaway gaps. If there's a breakout, yes, then we have here those three, this continuation gaps, yes, which are in the continuation of a trend, and at the end, the indication that there will be maybe some kind of reversal coming up, yes, that is the exhaustion candle, and that is how you can identify the market direction. Yes, and this is what trading is about. Trading is about identifying market direction to get the odds on your favor, to understand in what direction market is heading, and then you can use your candlestick pattern, chart, price action, and chart patterns to do your trades and do your hyperbole trades. So I would say this was the stuff about gaps. Yes. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me say a comment. I try to finish this second edition of the ebook as soon as possible. You see, I'm working hard on getting all the important stuff done. So I would say stay safe and bye-bye.